No doubt at all, geopolitical factors are influencing the big moves in the market. But later on this week, we're going to turn our attention to US inflation data. We've got CPI, as well as the Fed's favoured inflation indicator, core PCE price index. But we are expecting bigger volatility in the CPI data. That is directly linked to the massive rise that we've seen in oil and in other energy stocks. We're expecting to see that kick through to US data. But don't forget, last week we did hear early in the week from Jerome Powell that he felt inflation was in check. If these numbers come in with what we're expecting or even higher, I think you'd have to call him out on that one and see what they're really thinking. Hello and welcome to ATFX's US CPI data preview. Well, markets are still flying about. Comments on the Middle East, coming out of the US, coming out of Iran, are flying across markets. They're moving them hard and fast. But later on this week, we're going to turn our attention to US inflation data. It's going to be very interesting to see if all that's been going on in the Middle East kicks through to that key inflation number. And we've got CPI, massive numbers, as well as the Fed's favoured inflation indicator, core PCE price index. We're going to have a look at the CPI because that's where we're expecting to see some big changes in the market and the potential for some big moves. Short term, but probably in the longer term as well, and their impact on how the Fed's going to be looking at things. So what we're looking at for CPI data, it comes out on Friday. It will come out after the core CPI numbers. First up, that year-on-year number, last time out, 2.4%. This time, expected to come in at 3.4%. That is directly linked with what we're seeing from energy prices, the massive rise that we've seen in oil and in other energy stocks. They're moved much higher. We're expecting to see that kick through to US data. Month on month, up to 1%. Last time out, it was 0.3%. So these are big rises. The core number, which takes out a lot of these big volatile parts, coming in at 0.3%, up just 0.1 from 0.2% last time. But it's those bigger numbers that we're going to be focusing on. And if they come in significantly higher or indeed lower than expectations, expect to see the market move and move hard. No doubt at all, geopolitical factors are influencing the big moves in the market, but this is where it's starting to hit data. This is where those expectations are coming to fruition, and this is where the market will really be looking. We're really pulled back from any Fed rate cut expectations, and there could be even talk that the next one could be a hike. But don't forget, last week we did hear early in the week from Jerome Powell that he felt inflation was in check. Now, if these numbers come in with what we're expecting or even higher, I think you'd have to call him out on that one and see what they're really thinking. So massive, massive potential volatility on the back of these. What we're going to have a look today, we're going to have a look at how it could impact gold, which has been trading heavily on the dollar side of the equation, euro, the heaviest traded currency out there, and dollar yen, which could see some big moves as well. So bear with me a second and we'll go over to those charts. As always, though, if you haven't subscribed to our channel, please click on and we'll keep you up to date as we can with all that's going on in financial markets. So here we are on the daily gold chart. You'll be very familiar for this if you've been tuning in with us for a while. Still, what a cracking level based out just on that 200-day moving average. We are sitting firmly in the middle of the range. Topside resistance coming in around about 5,200. Support now coming in around about 4,160 with much stronger just above that 4,000 level. We will see moves in gold on the back of this dollar side of the equation. So stronger than that 1% month on month or the 3.4%. Expect gold to come off and come off fairly hard. As I said, support down here, initial support around about 4,166. Weaker numbers, and that there could be volatility in these numbers. They could have not translated through from what we've been expecting. Gold should soar to the top side. There would be a little bit of an initial reaction if we're still around these levels at 4,800, but the real stronger resistance level is up here around about 5,200. So plenty of opportunities to trade gold on the back of what numbers we get coming through on Friday. Here's a euro chart. We are sitting mid-range in euro as well, but we are being squeezed in. Resistance and support coming into this kind of flag formation. Support now coming in around about 114.70 on that resistance trend line. We're not too far away, only about 50 points. So we may have broken one side or the other, depending on what goes on during the week. But if we are sitting around these levels, stronger number, expect euro to challenge this support level. We've got more support down here. Probably the main one would be just above 114, the figure, and then a break lower, and that would be on a really big number. Could take us down towards 113. Conversely, of course, weaker numbers. We're expecting 1%. It comes in at like 0.3, 0.4. Expect this top side to break, take out that resistance trend line, and these recent highs just above 116. You can see there's a few of them around there. It would take us up to the 200-day moving average and then even further, probably to approach that 118, the level. So big trading opportunities on those. Let's have a quick look at dollar yen. This could be the humdinger, as we know, sensitive levels in dollar yen. So dollar yen, here's the chart. Most people will be familiar with it. This is the move that we've seen in recent months. I'll bring it into a bit more focus. We have moved all the way up. This is from way back in the 12th of February, down near 152. We hit highs again here, just under 160.50. We're trading not too far away from that. Strong numbers on this. Could see us challenge those resistance levels at 160.40. That high is there at 160.46. A break through this on much stronger numbers could take us up to dangerous territory for intervention from the Bank of Japan. We could see whipsaw moves. Conversely, of course, weaker numbers, it could take us back into this range. Initial support coming in just under 158, the figure. But what we're probably guaranteed on this number in all three of these products and others, we will see moves in the dollar. It is very interesting for market analysts at the moment to see how much of this perceived inflation from the Middle East, from the energy crisis that's global, hits through to that US data. And then we're going to be looking at how much we're going to get in the coming months. So fascinating. Our first real look at decent inflation numbers since the start of the conflict could be massive. It will really be affecting some of those macro guys out there. So big trading opportunities. As always, if you need anything from us at ATFX, please do let us know. But thanks for tuning in and good luck with your trading.